I've always prided myself on being a savvy investor, meticulously researching and carefully selecting every stock that enters my portfolio. But as I began to scrutinize the numbers, something didn't add up. At first, it was just a nagging feeling, a sense that there was more to the story than what met the eye. But as I dug deeper, the discrepancies became impossible to ignore. Take my holdings in XYZ Corporation for instance. On paper, it looked like a solid investment, steady earnings growth, a diversified product line, and a loyal customer base. But when I started digging into the financial statements, I noticed something peculiar. XYZ had made a series of large payments to an obscure consulting firm called Nova Solutions. At first, I thought nothing of it. After all, companies often hire consultants to help with strategy and operations. But as I continued to investigate, I discovered that these payments were not just routine business expenses. In fact, they accounted for over 30% of XYZ's total annual expenditure. That's when the alarm bells started ringing in my head. What exactly was Nova Solutions doing for XYZ? And why did it require such a substantial chunk of their budget? As I began to research Nova Solutions, I found that this consulting firm had ties to some of the biggest players in the industry, not just XYZ Corporation, but several other major companies as well. It seemed that Nova Solutions was a middleman, helping these companies facilitate a series of complex financial transactions that left me questioning the very legitimacy of my investment portfolio. I couldn't shake the feeling that I had been lied to, or at the very least, grossly misled. The numbers just didn't add up, and I knew I had stumbled upon something much bigger than I initially thought. As I began to analyze my investment portfolio, I was met with a sense of déjà vu. The same familiar stocks and bonds stared back at me, the same numbers and percentages that had been reassuringly consistent for years. But something didn't quite add up. The more I dug, the more anomalies I uncovered. It started with small discrepancies in my Vanguard 500 index fund. A mere $200 discrepancy over the course of a year seemed insignificant, but it sparked a chain reaction of further investigation. I delved deeper into my Fidelity account, poring over the tax loss harvesting reports from last quarter. That's when I stumbled upon an unsettling trend. Nearly every single stock in my portfolio had been simultaneously upgraded by at least 3 reputable brokerages, including Goldman Sachs, Morgan Stanley, and Wells Fargo. The exact same day. Every single time. My Schwab brokerage account revealed a similarly disturbing pattern. A cursory glance at the annual reports from 2020 showed an alarming number of correlated price movements among various stocks within my portfolio. It seemed as though my investments were, in effect, mirroring one another, or rather, being reflected by some external force that I couldn't quite put my finger on. My holdings with Robinhood revealed a similar phenomenon, an uncanny synchronization between trading volumes and prices across multiple asset classes. I began to wonder if there was more at play than simple market forces. The question on everyone's mind is, what exactly am I investing in? As I delved deeper into the financial records, I discovered a pattern that seemed to defy logic. The majority of my investments were tied to companies with questionable business practices, and yet they continued to thrive despite these red flags. Specifically, I found that over 70% of my portfolio was invested in a mix of tech startups and energy conglomerates. At first glance, this may seem like a diversified approach, but the more I dug, the more I realized that these companies had one thing in common: they were all facing mounting lawsuits and regulatory investigations. One company, Green Tech Incorporated, stood out as particularly concerning. With a staggering 23% of my portfolio allocated to their stock, I was shocked to learn that they had been slapped with over $1.2 billion in fines from the SEC just last quarter. And yet, despite this monumental penalty, their stock price continued to soar. It wasn't until I spoke with an industry insider who revealed a web of connections between GreenTech's CEO and several high-ranking government officials that I began to piece together the puzzle. Another disturbing trend I uncovered was the presence of shell companies in my portfolio. Companies like Novatech Solutions and Apex Energy Holdings, which were supposed to be part of reputable conglomerates, turned out to be nothing more than shell entities created to funnel millions of dollars into tax havens. The numbers were staggering. A total of $15 million had been siphoned off into offshore accounts in just the past year alone. The more I dug, the more it seemed that my entire investment portfolio was built on shaky ground. Companies with questionable ethics and dubious business practices had somehow managed to insert themselves at the core of my financial strategy. It was a shocking revelation, one that left me wondering how this could have happened without my knowledge or consent. As I continued to analyze the data, a disturbing pattern emerged. It appears that nearly 30% of my investment portfolio is comprised of companies with direct ties to the fossil fuel industry. This revelation has left me feeling betrayed and misled by the fund managers who have been entrusted with my financial well-being. The most egregious offender is ExxonMobil, which accounts for over 10% of my entire portfolio. Not only does this company have a long history of environmental degradation and human rights abuses, but it also continues to prioritize profits over sustainability. I couldn't believe that such a significant portion of my investments were being used to fund the very activities that contribute to climate change. But ExxonMobil is just the tip of the iceberg. Other companies like Chevron, BP, and Royal Dutch Shell also have significant holdings in my portfolio. These companies are not only major contributors to greenhouse gas emissions but also have a history of environmental disasters, from oil spills to toxic waste dumping. What's even more alarming is that these investments were made without my explicit knowledge or consent. I had assumed that the fund managers were investing responsibly and with consideration for social and environmental impact. It seems that my trust has been misplaced. The real-world implications of this discovery are staggering. Not only am I contributing to the destruction of our planet, but I'm also financially supporting companies that have a history of exploiting workers and local communities. The thought of being complicit in these practices is deeply unsettling and has left me questioning everything I thought I knew about investing. I can only imagine how many other investors are similarly unaware of the true nature of their investments. It's time for transparency and accountability in the financial industry, and it starts with my own portfolio. As I pored over the statements, one particular investment caught my attention, a large allocation to a company called Verifone Systems. At first glance, it seemed like a sound choice, given their strong position in the payment technology sector. But as I dug deeper, I noticed something peculiar. Our portfolio's stake in Verifone had grown exponentially over the past year, despite the company's stock price actually declining. At this point, my curiosity turned into full-blown alarm. What was driving this sudden surge in value? A series of transactions caught my eye, with tens of thousands of dollars being funneled into and out of our portfolio on a daily basis. It looked like a high-stakes game of musical chairs, with money moving in and out of Verifone shares at an incredible pace. I decided to investigate further, delving into the specifics of each transaction. The results were nothing short of astonishing. Nearly 75% of these trades were being conducted through a single firm, Atlas Investment Management. I had heard of Atlas before, they're a reputable player in the industry, but this level of dominance raised eyebrows. I couldn't shake off the feeling that something wasn't quite right. Who was behind these high-frequency trades? Were they acting on our behalf or their own interests? The more questions I asked myself, the more unsettling it became. I felt like I was peering into a dark corner of my investment portfolio, where secrets were lurking in the shadows, waiting to be exposed. One particular trade stood out, a massive $1.2 million transaction initiated just last week. It seemed to be the tip of an iceberg, with several other large-scale trades occurring around the same time frame. As I continued to unravel this tangled web of transactions, one thing became clear: there was more to the story than met the eye. As I sit here today, I'm compelled to share with you the unsettling reality that has shaken me to my core. My entire investment portfolio, once a carefully curated collection of stocks and bonds, has been